Hello and welcome to the KYDS Financial Literacy Series. This is video 2, all about credit cards. Ever wanted to know what a credit card is? A credit card is a card that lets you borrow money to pay for goods and services. With a credit card, you can cover your expenses and pay later. A credit card allows you to buy now and pay later. There are two types of credit cards, secured and unsecured. Secured cards are funded by you. For example, you pay $300 up front and have a $300 credit limit. Unsecured cards do not require you to fund it. Credit cards allow you to build credit that will give you the freedom to finance bigger items in the future, like a car or a house. Credit cards are usually accepted everywhere and are easier to use than carrying cash or writing a check. Although it may seem easier to purchase now and pay later with a credit card, it's worth noting that you might end up paying more in the long run if you don't keep up with the payments. Interest rates can carry over to your remaining credit card balance and accumulate debt. Credit cards allow you to purchase items easily and are usually accepted anywhere you shop. A credit card is easier to replace than cash. For example, if you lose your credit card, the bank will send you a replacement card in the mail within 24 hours and cancel your old card, so there's no need to worry about fraudulent activity. Unfortunately, the bank will not replace stolen or lost cash. There are some credit cards that offer rewards, such as discounts to certain brands and travel miles. Accumulating travel rewards allows you to redeem them for airline tickets or hotel rooms. Building credit history is important to your bank and lender. Every time you pay your card on time, you positively impact your credit. On-time payments allow you to build trust with your lender. Most credit cards will handle disputes against fraudulent activity. And if you're ever curious what your credit status is, banks will allow you to view your credit report. You should be careful about spending habits with credit cards. Having a credit card is a big responsibility, and it makes it easy to go into debt by purchasing things you don't need. The average college student is $1,423 in credit debt within 1 year of getting a credit card. If not handled correctly, a college student can quickly earn themselves a poor credit rating. A poor credit rating is when you don't pay your bills on time. Having a poor credit rating can ruin your chances for a future home or car loan. It can affect your ability to even get a job. High interest rates can cause more debt in the future as interest accumulates. This means you can be paying your lender hundreds, if not thousands of dollars more than what you actually spent. Let's say, for example, you buy a PS5 with a credit card for $600 at 20% interest. If you only make the minimum payments, you would pay off the PS5 in a little over 5 years, and in the interest alone, you would be paying over $400. And in 5 years, the PS5 will be old news. A FICO score is a number based on the information in your credit report. There are 3 types of credit reporting agencies: TransUnion, Equifax, and Experian. Lenders look at the average of these 3 scores to determine if you're a good candidate to receive a loan. The higher the score, the lower the interest rates, and scores range from 300 to 850. If your credit score is anywhere between 781 and 850, you are considered to have excellent credit, and you will have no difficulty getting a loan. On the contrary, if your credit score is anywhere between 500 and 600, you're considered to have poor credit. A lender would make it very difficult for you to get a loan, and they would give you a really high interest rate. Like stated before, having a credit card is a great responsibility, but there are some perks. Credit card advantages include travel benefits that allow you to accumulate and spend travel miles and hotel points that can potentially add up to a free getaway weekend if you're able to manage your credit well. And when traveling, credit cards are travel friendly. In many countries, major credit cards are widely accepted. You'll often get a favorable exchange rate too. Some cards offer benefits like emergency card replacement or free car insurance on a car rented with your card. So to recap, credit cards are a useful tool to use if handled responsibly. A good credit score can drastically improve your finances and bring you security. just as well as a bad credit score could make it very difficult for you to achieve major life goals like purchasing a home. It is always best to use precaution when using a credit card, and it is wise to live within your means. When it comes to credit, the decisions you make now will have an impact on your life for many years. For more financial literacy tips, check out our other videos, and make sure to like and subscribe to see more. And don't forget to tune in next time for KYDS's Financial Literacy Series Video 3, all about paying for college.